All right, so good afternoon, and welcome to our training session. Today's session is going to be about my strategy, which is the successful strategy. And also, I will take you guys through the Discord for any newbies, anybody that's not actually a customer at the moment. You'll be able to see what it is that's going on in the back. All right. So, guys, first of all, if you saw this morning, I'm actually, guys, you can see my printer in the back working hard. Yes, guys, I have built you guys your very own trading journal. So I'm actually printing mine out as we speak because we all need to follow the same pattern. I can't give you guys something and not use it for myself. So how it's going to work. So what's going to happen when you purchase your ebook? If you purchase the ebook, you'll get a downloadable file, which you'll be able to print out. And this is what it will look like, guys. So this is my monthly checklist. So in my monthly checklist, I will write down what I want to be consistent for every week. And I will tick off every box for every day that I stick to that consistency. Okay, so every day, every week, every month, you have a sheet that you are able to write down what you want to do weekly. All right, so you might not have a lot of things. You might only have one thing that you want to target for the week. That's fine. So you've got enough space for the rest of the month. We also have keeping track. Keeping track pages. So in your keeping track pages, you'll be able to track your trades. Oh, thank you, Shireen. So you'll be able to track your trades, track your winning trades, your losing trades, and write down your notes in the note section to say what you could have done differently, as to how you could have been profitable on maybe a losing trade or even a winning trade. What could you have done differently to even secure more profit? What could you have done in the sense of maybe looking at the strategy, analyzing what happened, why the market pulled back? Did you get out too early? Did you not wait long enough to secure maximum profit? This guide will help you be able to mitigate all your losses, guys. If you can see where your losses are being taken, you just literally do the opposite and you'll be fine. But as long as you can write it down and keep note, then you can't go wrong. All right, so we also have a recap of our day. Thank you, Pauline. So we also have a recap of our day, which you'll be able to write down whatever you want. Like whatever you want. It doesn't even necessarily need to be about trading. You can actually use this as a mindset, as something to help with mindset. So on the recap your day, it says one thing I want to remember about today, how I felt about today, and today I am grateful for. So in that section, you just write about what did you do for the day that was either successful or wasn't successful, and how you're going to treat it days going forward. All right. And then we have a notes section. So this is like a kind of overflow section where you'll be able to write anything for the rest of the month that you might not have been able to get into the rest of your pages. I didn't want to make it too long for you guys, because if it is a printable version that you have, then you can literally just print out the pages, the specific pages that you want. So I've put a little calendar in the corner for each one of your keep track days. You've also got your month date, on your monthly checklist. So you can just go back and print out how you want to, where you want to, and what you want to. All right. So I just want you guys to have, you're welcome. I just want you guys to have the best possible outcome when it comes to your trading. We don't want to stay stagnant, guys. So please, 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 if you're not journaling your trades, you need to, okay? You need to. I haven't made the price expensive for the ebook, the printable book. You can get the printable book as well. I'm waiting for mine to come, but I did want to show you guys how it would look if you printed it out. So my printer didn't want to do double-sided today. Otherwise, it would have actually come out like a proper book, but still, we move. So my printer is actually moving a bit slow. We're only on August at the moment. August. So we're just going to leave that there to run. And then we can carry on with the rest of our session. So if that makes sense to you guys and you're loving what that looks like and you're excited about getting your journal, type some 7s in the chat, guys. I'm excited to even start using my journal. So I've put dates. Obviously, January is already gone, so you don't have to necessarily use that, but you can use that as another overflow if you want to. Cross it out, just cross out the date and just put February or put March, whatever you want to put, guys. You can just use the journal as you want to. You've got a whole calendar there as well, so you can keep notes of dates, important things that you need to remember. So for instance, if we get a big news that creates a big high volatility in the market, that's something you want to write down in your journal. So on this date specifically, so say Friday, the market tanked because of the amount of FOMC news that we actually got. So that's something that you'd write down in your journal. Do you want to trade FOMC? Maybe a yes, maybe a no. My personal preference is no. I do not like to trade news, and I had to learn that for myself very quickly, because news is just not my friend. Like, I will get into news and sometimes it will work, sometimes it will not. More time than none, for me personally, it doesn't work. So I do not trade news, okay? So that's something that you could, that's just an example of something that you could write down in your journal to help yourself with your trading. If you write things down, guys, you won't go back and do it again. When you don't write it down, the FOMO will come back and creep in. You might take a loss for a day, and then you're like, oh my gosh, I need to make it back. You forget about the news, you forget to check the news, and then all of a sudden the market drops and you're in a buy. And then you're kicking yourself at the end of the day because you thought about this before, but you didn't actually write it down and go back on your notes. All right, so for every month, you can actually see what notes you've made. All right, I'm so excited, guys. I'm actually so excited. So on to the strategy now. So how many of you in here have the strategy? Type some 2s in the chat if you have the successful strategy, if you are trialing the successful strategy at the moment. I just want to see how many of you guys on here actually are using this, because I do have Kim's strategy as well. So I can go type some 3s in the chat if you are using Kim's strategy. First of all, we're going to go over the successful strategy, and then I will go over the Kim Possible strategy as well. Okay, so that's fine. That is cool. All right, so first of all, welcome to my strategy, guys. Like, I'm actually so amazed at what I've actually done. Like, I'm actually amazed at what I've done. I've actually built my own strategy, guys. Yes, it looks familiar. It might look familiar to a lot of you lot, but when you have something that works for you and you want to keep it uniform, that is the only way to do it, guys. It's literally the only way to do it. So, for instance, I called out the buy stop on oil, thinking that oil the buy limit, sorry, on oil, thinking that oil was going to come down. Oil did not. It finished its retracement here at the 50% and pushed up. This is where I called the market out for the buy limit. And yeah, I was expecting market, as you can see, market did break and close the 50%, but it rejected it. So oil's actually gone back to the upside. So if you do still have that buy limit set, you can delete that buy limit because market has actually gone from that zone already. All right, so Cheryl, if you do want to get onto any of them, if you do want to trial any of them, do message admin before, do message admin. Don't let the week run up and you haven't trialed any of the strategies. It is free to trial at the moment, so don't miss an opportunity to get some more knowledge into the market. All right. So what I would say with my EMAs, guys, is I'm literally giving you a cheat sheet here, a cheat sheet. So if anybody, for instance, anybody saw this oil trade, anybody was watching oil, you would have seen this red support resistance box pop up and market absolutely tanked. It not really tanked, it pulled back, but for our accounts, that would have been a lovely tank, a lovely draw down. All right, so as you can see, we have our aqua, our gray, and our blue, all in that order. So first of all, before I even show you on my charts, let me show you guys. Let me go into the Discord and show you guys how the strategy actually works. Yeah. All right, so let's go to here. Is Lindy in? She just messaged in the chat, didn't she? Okay, where is the successful strategy? All right. So as you can see, guys, I have dropped in everything so that you guys can see, you guys know, and you can always come back to this to understand what it is you are looking at. All right, so we start here. It's a bit small. Let's zoom it in a little bit. What's going on? No, we don't want to go to setting. We want to zoom it in a little bit. All right. So as you can see, I should have kind of changed the background on this because it might be a bit difficult to see, but when you're on your phones or your computers, it might look a little bit clearer. So I'm always looking for my aqua, my gray, and my blue in that order. Doesn't matter whether it's bottom to top or top to bottom. Reason being, if it's top to bottom, aqua, gray, blue, that is confirming my uptrend. If, for instance, I have the market in the opposite direction with the blue, the gray, the aqua, that is confirming my downtrend. Okay, so I'm always looking for my 3 EMAs to be in that order. If I get my EMAs in that order, all I have to do is wait for a pullback and get in for the buy or the sell. And then I can take market to previous structure. All right. So where you see market crossing over, that is confirming that the market is retracing to possibly change direction, maybe, maybe not. Until I get the all EMAs crossed over to the other side, we cannot confirm a change in direction. That is just confirming our consolidation zones, guys, okay? So our red and our yellow EMAs, these are confirming our price action. So when the yellow is above the red EMA, that is confirming price is pushing up. When the yellow crosses over the red to the downside, then we know that the market is going to give us a pullback. So the yellow and the red will give us slightly quicker insight into the market as to when market is pulling back. And that bases off of price action rather than the actual trends of the market. Okay. So if that makes sense, guys, type some threes in the chat. I don't want to go too fast. If you guys have any questions, do drop it in the chat. Okay, so when price crosses the aqua EMA and you have AGB, this is a good point to enter the market for a buy. Use previous highs or lower highs to find your TPs. Okay, you can also use your EMAs to find out your EMAs to find your stop loss. Okay, so as you can see in this example here on Bitcoin broke across the aqua, and as you can see, the yellow and the red were prepared, ready to cross the aqua to the upside as well. When we saw price retracing to the downside, price crossed the aqua. Where was price going to go once it crossed the aqua? Price was going to retrace back to the 50% to retest the 50% level. If price broke the 50% level, then we could have possibly seen market continue to the downside. But as we already know, we had the aqua, the gray, and the blue in that order. So I would be expecting, once market has done its retracement, for it to pull back to the upside. And as you can see in this example, market did exactly that. Market pulled down to the aqua and rejected and then continued to the upside. And as you can see in this example, what happened before and then what happened after. So market did play on the aqua line. It consolidated on the aqua line for a while, but we had the confirmation that the buyers were in the market. If you entered from the gray line, you would have been in straight profits and there was no drawdown, zero drawdown. So this is how I catch the trade that have zero drawdown, because I wait for market to come to me, wait for the retracement, and then get in. Once I can see the direction of the market, all you have to do, guys, is wait for the pullback, and then you take your entry. Do not take your entry on a high. We do not buy when it's high, and we do not sell when it's low. And lastly, when the aqua and the gray cross over, this is a signal of a bigger retracement. The price will attempt to pull back to the 80%, which is the 800 EMA, which is our blue EMA. Okay. And when the yellow and the red crossover, this will actually confirm to you that price is going to come down to that zone. Okay. If the yellow and the red did not cross over and they just rejected and pushed back up, then they could have rejected the crossover of the aqua and the gray, which could potentially happen, guys, because until you actually get the crossover, you're still in a buy trend. All right. Does it make a difference how far apart the AGB are? So if you can catch when market is crossing, when the EMAs are crossing, that is your best bet to take entry. If market has pushed too far, then it's not a market that I would be looking to enter. All right, I'm going to give you an example of that in a second. All right, and then here we just have our setup, how to set up your market. But once you get the EMAs on your chart, it should just be simple drag, click and drop onto your chart. We shouldn't have any issues with having to change anything on your charts at all. All right, so does it alert you when they are in order, confirmation, etc.? So you will get a buy pop out. So as you can see here, market came back to this zone and we got a buy here on oil, for instance. Market finished its retracement at the 50% and then continued back to the upside. So as we see, we have our aqua, our gray, and our blue. All we know is that market is retracing. Market was not selling, market was just simply retracing because we have the confirmation of the buyer trend. So if you waited for this zone, if you waited for the pullback and got in at this zone, then you would have been in some serious profits and hit TP already. All right, so market will give you confirmations of where to get in, but alerts as such as yet, no. I haven't set up any alerts on here. I am trying to work out the alert section and how that works and how I can get the alerts into Discord. But it's not that simple, guys. It's not that simple. So I'm testing it at the moment, and once I can get it all sorted, then we should see alerts coming in. All right, so like I said, this market will call buys. So it will call buys because it knows it's in an uptrend. Bearing in mind, my EMAs and my buy and my sell do not, that they're not set to correspond like that. They're really not. I didn't set them to correspond like that. Market will just show you when the buyers and the sellers should be in with these buys and these sells. Hence why you've got the support box, the resistance box here, and it's called a buy. Why is it called a buy? Because markets came back down to your 30% and market expected it to reject it. It didn't reject it. It wanted to pull back further. So we allow market to pull back. So be careful, guys, when you're getting into markets that have pushed, that have done big pushes already, because you will get pullbacks. Another thing that I will speak to you about is retracements, guys. So every market has to retrace. And when I see people saying to me, oh, it's selling. Oh, I say get in for a buy, and they're like, oh, it's selling. It's not selling. It's just retracing. Just be patient and wait. If we caught a bad entry, we caught a bad entry. But just be patient and wait. If it hits stop loss, that means the market is going to do a reversal, okay? But where I do usually set my EMA, my TP is below my EMAs. So if market is going to retrace, is just retracing and then going to take off, then we will still be in that market. So what you will see with every single candle, it doesn't matter what time frame you are on, it doesn't matter what position you're looking at or what you're trying to see in the market, your candles will always retrace back to your yellow line. Point blank period. It will always retrace back to the yellow line. Okay, so if you always look for market to retrace back to your yellow line, you will never catch an entry too high. So for instance, oil just actually did a really big pull up, and it's going to drop. I'll show you why it's going to drop. As you can see, market did a nice push here, but none of these candles actually touched the yellow line. None of them. So when you see market continuously missing the yellow line, you are going to get a reversal in the market at some point. You are going to get a bigger retracement at some point. When you see market hugging the yellow line, this is when you can take your entries, guys. So as you can see here, we had this big engulfing candle. The yellow and the red crossed over, confirming our pullback. Once we got this break and close of our aqua EMA of our 30% retracement, I personally would have been expecting it to come back to the 50% retracement, which is exactly what market did. Market then came down because of this big engulfing candle. It missed the yellow line a few times. Market then consolidated in this zone to meet the yellow line again. If you waited in this zone for market to touch the yellow line before you took your entry, if you took your entry when market touched the yellow line, as you can see, that was straight profit. If you was looking to take it down to your 50%, as you know, your 50% was the retracement level you were looking to take market to, you can see that that was a winning trade. Market pulled back to the yellow line and kept hugging the yellow line all the way down. Okay, we did get a retracement back to the aqua line. It rejected. Market still came down to retest the 50%, and then it took off. Okay, so these EMAs will show you exactly where market is going to retrace to. And for instance, if you get into a buy, if you saw market pushing up and you got into a buy, you can see if market is going to pull back. Okay, so with my RSI now, this is the successful indicator, the successful RSI. You can see when market is showing us market is overbought in this zone. And you can see when market came almost oversold in this zone here. So once I see market overbought, that's signaling to me that a retracement is coming. Where this market is going to retrace to, I couldn't tell you, honestly. This market could retrace back to here, it could retrace back to here, or it could retrace back to here, consolidate in this zone to then take off again. So when I say I am very wary of taking retracements, that is the reason why. Because if the buyers are very, very strong in the market, market will not pull back to one of your EMAs. It will just continuously consolidate to bring the EMAs to it. And then once they have built up enough momentum and pulled the market back on the RSI enough, created enough space, it will take market back, continue market to the upside. So as you can see, where's an example for it? Here, for instance, we saw market retracing, market didn't quite touch the aqua, and then it continued back to the upside. It doesn't necessarily need to come back to all the way to retrace. So please be careful if you are taking any retracements and you can clearly see the trend. All right, so if we look at market from here, when we got the crossover, like I said, the market did, when the aqua crossed over, market did a nice pull up. When the gray crossed over now, and we officially got the buy trend signaled on oil, this is now a trending market. The market did a big drop. Everyone would have been buying up here thinking, oh, it's going up, it's going up. But why did it drop like that? They couldn't tell you why it dropped like that. They couldn't tell you why it came to that retracement level. They couldn't explain just looking at the naked chart. But if you use your fibs, or if you use your EMAs as I do, then you can now see that market actually just retraced to be able to set up to move higher. When the market came down all this way, we still did not get the EMAs cross back over. The EMAs were still aqua, gray, and blue. So once you have those three in that order, it's undeniable. Do not take the opposite direction. Just wait for market to set up and take that buy. So my yellow trend line on the TSI is actually, so you can see when market is waving. So when you get, this is actually another 200 EMA on my TSI. So when you get market cross below, you can see what market did. Market actually gave us a bigger retracement right down, right? Once market broke back above the 50%, so my gray line in the middle here is actually the 50%. Okay, so once it's crossed the 50% and keeps going, you know that market is going to keep buying. Okay, so your 200 is just another extra confirmation to see who's stronger in the market at that point in time. So as you can see in this zone here, once market crossed the 200, market gave us a bigger retracement. Okay, so that is giving you your extra confirmation to say market is going to retrace. Okay, once you see market under your 200, beware. Beware. Okay, once it crossed back over the 200, market just continued. It couldn't stay under the 200 again after that. Market just kept pulling to the upside until it went so overbought that they had no choice but to reject the market again to bring it back down for another retracement. All right, so the 200 EMA is showing you who the stronger is in the market at what point in time. Okay, work the same on any, yeah, everything works the same on any time frame you want to look at. Any time frame. You can use the minute, you can use the 5 minute, you can use the 15 minute, the 30 minute, the hour, the 4 hours, you can even use the daily. Your confirmations will be exactly the same on every single time frame. Okay, so if you're swinging this market, for instance, as you can see right now on oil, we got the buyers in. This is crossed the 50% here. We actually have crossed the 30% here. We have the yellow and the red, and we have the yellow on top of the red. We actually have our blue here. So where's our gray? Let's find our gray. Our gray is actually up here. So if I'm looking at this market at the moment, you can see what's happening on oil. You can see what's happening. We don't have a confirmation of trend. On our daily, we actually don't have a confirmation of trend. This is why market is doing all this foolishness and just shooting left, right, and center for oil in the last November, December, January, in the last 3 months. Oil's just been waving, just up, down, up, down, up, down. It has stayed in the same zone since November. We got a slight breakout here, but it rejected straight back into the consolidation zone. This is a very, 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 very big consolidation zone for oil because this is daily. So if you realized what was happening from here, you would have been able to take your sell from up here, take the buy from down here, take the sell from up here and take the buy from down here and hold that market and play that market until you can't take that anymore. All right, so the next move that I can see is that market is going to attempt to go to that 84 zone this week. Okay, so we can see that the buyers are in on our daily. The volume is green. We have market above our 200. We've got market above our aqua. Aqua is actually trying not to break the blue, as to why market is consolidating like this. But once we get that crossover is going to be undeniable. This could have just been a bigger retracement, guys, because when you get a big buy up like this, you have to get a retracement. And when we look at our Elliott's waves, for instance, look at this. Jeez, in 2020, it literally just tanked $6, you know. I find this amazing every single time I look at it because I'm thinking to myself, where was I? Why was I not in this? And who didn't tell me about this? 2020, guys, is when I first started trading. And this is lockdown. This is what's happening throughout lockdown. I was fully back in the country though, and then fully, I think I literally just started trading in April of 2020. And yes, this is what oil did in those times. And if we count the waves, let's count the waves. Let's see what's happened here. So Elliot's wave is another thing I will explain to you guys in a different time, but there's so many ways you can gain confirmation into these markets. So let's have a look. So we got 1, 2, 3, 4, 5, 6, 7. We've got 7 waves on this. Usually it's only about 5. Usually, because when you get to wave 5, that's usually when the buyers are actually starting to come in on this market. You can clearly see the waves on this. So we've got about 7 waves before the market tanked. So the pullback will always be a bigger pullback than everybody expects it to be. So as Kim showed you guys with the Bitcoin thing last weekend, when people disbelieve, they don't believe that this market's going to do anything. This is the point of disbelief down here. This is the point where everyone believed up here and they tanked the market. So just looking at this, we could just be in for a retracement, and oil could be on its way back to the upside now. I can't confirm that. I can't confirm the trend because, as I said, we have the aqua and the grey underneath, and we have the aqua underneath the grey. So it's now confirming my consolidation. It's not confirming my trend. Until I get that market cross back over to the upside, I can't actually confirm a trend. And once that happens, what do? We wait for the pullback, and then we get in for that buy, and we hold that buy all the way up to Jesus, as Kim would say. All right, so just looking at German 30 now, for instance. Okay, so I like this example. This is a good example. So on German 30, we were waiting for this crossover for the longest, the actual longest. And this is why it's important to look at your daily as well as all your other time frames, guys, because then you can get a clearer picture as to where you want to take your entry. If you have to wait a week for market to come to you, you wait that week for market to come to you, because you know that buy up is going to be humongous, that you can hold that trade for, how long has this been moving? Since December. So if you held on to German 30 for that buy, when it gave us the pullback on the 21st of December, it's now the 13th of February, guys. 2 months later, 2 solid months later, you could have still been in this buy. Market signaled to us that we were going back to the upside. So you have the aqua, the grey, the blue. Market did a big pull up to be able to pull the EMAs back to the upside to confirm our trend. So hence why we got the pullback. Market pulled back to retest all 3, not just 1 or 2, all 3. And it rejected right from there. So even if you waited for that rejection, you've already got the confirmation that market's about to go to the upside. It's undeniable, guys. There's no way you could have sat there, saw this market dropping and said, okay, no, it's selling. No, it's not. Because what was it? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days before, guys. 10 days before we got the crossover. So 10 days before, this market told you it's going to shoot up for a buy. They pulled the market back down to retrace. A lot of people would have been buying it here, blown their accounts and whatnot. But if you waited, saw that market was going to pull back on this day, specifically here on the 20th of December, and you saw this wicks do account for a lot as well, guys. So just bear that in mind when you're looking in the market. Wicks account for a lot. Wicks mean liquidity, wicks mean money. So they don't always come back for those liquidity points straight away, but they will leave them dotted around in the market. So as you can see up here, for instance, on the 13th of December, this is where market signaled to us we're going to get a larger retracement. It signaled it. Why did it signal it? Because it left this big wick in the market. How did we know it was going to come back for this wick? Because it's got the aqua, the grey, and the blue in that order. So we know that they're going to come back for that liquidity. They weren't going to come back for the sell liquidity, not just yet, because the market is not selling. Let's see if we can find anything else. Let's see if we can see anything crossing over. All right, so here we go. So Euro GBP, we've just got the crossover of our aqua, our grey, and our blue. So now we actually have AGB on our daily time frame for Euro GBP. What are we waiting for now, guys? What are we waiting for now? Can anybody tell me what are we waiting for? We're waiting for a pullback. Thank you, Roger. That's exactly what we're waiting for. We're waiting for market to pull back now. So when market pulls back, market is going to most likely give us a bigger drop on Euro GBP. So as you can see, we're waiting for the yellow and the red to cross over to confirm that pullback, but this market is going to give us a bigger pullback to then take it back to the upside. This really looks like a bad consolidating market as well. But we do know, what we do know is that we've just got our confirmation of our buy. All this liquidity up here, they are going to come back for it. So what you could possibly do, for instance, when you're looking at these charts, what you can do is drop a line around your retracement zone where you expect market to retrace and set your alert. So Euro GBP, pullback zone. So when market gets back to there, I will get alerted that market has actually done its retracement. I can then consider where to get in for that buy. I can either wait for that daily candle to close and see what it does, or I can actually just drop to my lower time frames, see when that rejection is happening, and then get in for the buy. Okay, because I know that this market is going to buy. So what I may do every week, once on our sessions on Thursdays, we might just go through some charts, see what we have lining up AGB wise, wait for the pullbacks, and then we take the market up for the buys. I'm not taking any retracements, guys. We can take retracements on our lower time frames, yes, of course, but what's going to be more profitable is the moves that give us the most profit, which will be the moves that happen to the upside. On this mark, when this market's going to come down, it's going to give you a lot of spiky movement because the buyers are still there. So just be careful with that, be aware of that, and just know if you do get in the opposite direction and you do already have the confirmations that market of the direction of market, then you trail that stop loss until you can't trail that stop loss anymore. Let's have a look at Euro JPY. So as you can see, Euro JPY has been buying. Wow. It's actually been buying for a heck of a long time. So as you can see again here, so since 2021. Since 2021, February 2021, you know, for 2 years straight, Euro JPY has been buying. For 2 years straight, Euro JPY has been buying. Wow. Okay, so how long did it take for this market to give us the retracement? It took a whole year. It took a whole year for market to give us the retracement. It actually did. So it's completely up to you how you play this market, guys. It's completely up to you how you want to play this market. If you're a scalper, so we're looking on the daily time frame at the moment. So if you're a swing trader, this is for you. If you're more of a scalper, then we use lower time frames. But like I said, the principle remains the same on every single time frame, guys. It remains exactly the same. Okay, so as you can see, we got the crossover here, and market pushed up for February, March, April, May, June for 4 months, gave us a pullback for 2, pulled up for another 2 months, gave us another pullback for another 2 months, pulled up for January, pulled back for February, well, pulled back for January, pulled up for February, pulled down for March, and then the market just took off. Okay, it just absolutely took off. So from we got the retracement back to the zone, back to the level, back to the zone. See, it called the buy zone here as well. So as it saw that previously there was strong buyers in this zone. So when it's got the retracement, we've got the support box come out here. With 100% taking that right from here. Is this set? Okay, sis. It is. I am recording, so I will drop it in the chat once we are done. Once I can upload it, all right? So, as you can see, guys, we've had Euro JPY just absolutely buying. Absolutely buying. If you could have caught it from back there, beautiful. Beautiful. So GBP JPY. Okay, so GBP JPY likes to do things like this. I don't trust GBP JPY because of moves like this. God's honest truth. GBP and JPY move more volatile than gold does. And that's the God's honest truth. When it's ready to move very volatile, it will. But as you can see, it waited until here to give us that actual pullback from this big buy up. I don't know where GBP thought they were going before they pulled this market back, but they went. They really did went. They really did just cut and leave. So from March 2021, they've been buying, and then they pulled this market back in September 2022. They pulled it right back to take off. So as you can see, we've got all the waves in between here, but it's only now we're getting the crossover for our EMAs, which is confirming my consolidation again. We'll see if it rejects it. As look at GBP JPY today. That buy candle is just ridiculous. The market has literally just all of a sudden turned around this morning. All of a sudden, everything just started to shoot up and shoot down. So if AUD JPY can stay above this zone, we should see the aqua cross back over the grey to confirm a buy. As you can see, market gave us the crossover here on the daily, gave us the pullback, and then went. So it doesn't matter what you're looking at, guys. It doesn't matter what pair you're looking at, what time frame you're looking at. The principle will always remain the same. Just remember that the principle is what counts. Forget about what you think or what you imagine to happen in the market. We're not playing any guessing games, guys. Use your time frames, utilize all your time frames to be able to see what this market is actually doing. All right, so as you can see on oil, on the daily, we got the pullback, and now oil, we've just explained this one, haven't we? Yes, we have. So we've got a consolidation right now, and we're going to see what happens on that one. Anywho. So US 30, we've just got the crossover. We've just got the crossover on the daily on US 30. So that is confirming to me that the buyers, well, not just. When did this crossover? November as well. So this is confirming to me that we are waiting for a pullback so that we can get into this market for a buy. Once we get that pullback, then we can get into the market and hold this trade. For people that have those swinging trade accounts, yeah, this is the time to swing it. Oh, so look at NAS. NAS is in a horrible position right now. So we have the sellers actually in on NAS right now. How that is possible when they all move the same, only God knows. But we actually have our EMAs to the opposite direction now. So we've got the aqua, the gray, and the blue to the downside. So this is confirming my downtrend on my daily time frame. We've actually got a pullback on NAS at the moment. This will be classed as a pullback because this market is signaling sellers to me. And as you can see, even my charts realized that the sellers were in from this zone here. Somebody did ask a question about the buyers in the boxes. How often do the red and the green boxes pop up? So the red and the green boxes will pop up when market reaches structure. So depending on what time frame you're on, when market creates structure, you will see a box pop up. So as you can see here, we got a support box pop up here. Why did we get the support box pop up here? Because when market came down to this zone originally, it actually rejected it. It didn't stay below this zone here. So that is why we got a support box here. Market came back down and it expected market to stay above this, reject this zone again. It didn't. It came further down. The market then came back to this zone again to retest and rejected. Markets realized that we've got the retest and rejection, given us the sell, and then we could have taken it down. The only thing that my boxes don't do is change color. That's the only thing they don't do. They don't change color, but it will always signal the zone to you. So if this market does want to buy up, this is where you'd be looking to buy this market from when market breaks and closes this zone here. Okay. The gold is the same. Gold is in a buy trend, but we are actually getting a crossover on gold at the moment. Has gold dropped again this morning? No, it's gold's gonna sell. Why do I've been saying for the last week or 2 weeks that gold is going to sell. It's going to sell. I can see these sellers just creeping in this market, and they keep trying to reject it and trying to spike everybody out, because realistically, our accounts, I don't think anybody's account, unless you got £1 million in your account and you're on a 0.01, I don't feel like anybody's account can handle a retracement like this on any account. Like you literally have to be on a 0.01. Because what was this drop from 1960 all the way back down to eight. Look, the market's at 1860. That was a whole 1,000 pips, guys. 1,000 pips. If you could have bought 1,000 pips on even a one lot size, 1,000 pips on a one lot size. Oh my gosh. Trust me, that's like 10 grand. That's like 10K. That's a 10K drop there. 10K drop there. I was just about to say, GBP USD, we need to get in for a buy. No, we don't. No, we don't. This market is going to consolidate. See, I anticipated for market to reach this zone here, and it keeps rejecting from here. Hence why we've got the resistance zone. We got the resistance zone right in here. So we're going to wait to see if market can actually break the buy trend. But right now, we're in a downtrend. So if this market's going to do anything, it's going to drop. But we've got the aqua crossover the grey. So we can't confirm that until market does what it does. Lord have mercy. We're getting into silver for a buy. Can you guys see this? Look. No, this is undeniable now. Undeniable. Okay, we've just looked at so many examples. I'm all deleting the drawings. Let's remove the drawings for a minute. This is undeniable, like undeniable. So we got the crossover here of the aqua and the grey. We then got the crossover here of the aqua and the blue. We then got the crossover here of the grey and the blue. Market has now retraced back down to the blue. So today we're going to see if market is going to give us a pullback. If silver, we don't have news today. We don't have news today. So if silver stays above this zone, we're going to see some buyers come in this market, guys. We are going to see some buyers come in this market. Anybody that's got their live accounts on here, get ready to swing your first trade. Get ready to swing your first trade, because we're going back to previous highs. That's what we're going to do. We're going back to previous highs, not lower highs. They're going back to take this liquidity out of this market. That's what they're about to do. So this is a zone here. This is a zone. Oh, let's use this one. No, this market really fully spiked all the way up there. And we could use this one here. So this would be my swing move on silver. So I would be looking to take silver from here, because the buy actually hasn't gone yet, if that makes sense. If we look to all the rest of them, they all did a big pull up before they dropped back. This one has actually given us instant entry. So let's look a bit deeper into silver right now. So if I go to my 4 hours, let me see what my 4 hours is showing me. My 4 hours is showing me the exact same thing. My 4 hours is showing me the exact same thing. I'm getting in for a buy, guys. If you want to get in for a buy for silver, you can get into a buy for silver. If you want to screenshot my chart for your TPs, go ahead, because these TPs are quite far. If you want to swing it, and we'll put stop loss fully below this EMA here. All right, where is my colors? So I'm actually entering silver for a buy. We've just got a new. Oh, did my ink run out? Oh, that's rude. Oh no, I must have run out of paper. Must have run out of paper. Got to finish this later. I just realized it stopped. Okay, so I'm entering for a buy on silver now. Thank me later. All right, so you can swing this all the way if you wanted to. It's up to you, honey. Let's drop down to the hour and see what's going on. So on the hour, as you can see, our retracement looks a little messy. Looks a bit bigger, honey. Looks a lot bigger. But where's this market going to come to? That was the question. And this was the zone here. This was the zone here. Double rejection there. So once market can stay above this zone here, which makes sense because then it will cross back over into the 30% retracement zone to go back to the 50% retracement, then we are good to go. We are great to go, in fact. Let's go to the half an hour, see what's going on. So as you can see on the half an hour, we did a retracement. We're back to the aqua and it did break and close it. So we'll see if market's going to stay above it. We had a lot of sellers in here and I've been wondering where this market's going to turn around. So it's good to analyze, guys. It really is good to analyze because I've been wondering when this market is going to turn around, because we know that we have majority of buyers still in on our daily time frame. So as you can see, our lower time frames are still signaling that sellers are in the market. So this is why I say when you use your lower time frames, you can take the retracements because market will show you the retracements as a sell. Okay, so if you took silver from here, for instance, on the 15 minutes, if you saw when market did the crossover, it just absolutely tanked. It all called the sell from here because it realized that now we've actually changed direction of the market. It called a buy up here because we got the break and close the market. We got the EMA's break and market kept going. The buyers were really in at this point. They just weren't strong enough to continue this market to the upside. And when you see market doing this, this is not a market to trade. Sell, sell, buy, buy, sell, buy, buy, sell, 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 buy, buy, sell, buy, sell, buy. But there was no actual confirmation of trends in this zone. Yeah, we just did gold. I can go back over gold. So if I go back to my daily, if I start on my daily, this gold might, retracement might be done, but I say but, because sometimes silver and gold may have, no problem. Sometimes we have silver and gold disassociate, like silver will do its own thing and gold will do its own thing. And then so on and so forth. So as you can see at the moment, as you can see at the moment, we have had a retracement on gold, and it is still below our 30% retracement. So I'm anticipating that we are going to get a bigger retracement, because look what's happened, guys. So the aqua took a lot longer to cross. The market didn't actually allow the grey to cross. It was just the aqua that crossed over. So we could see a retracement back to the 1800s. This is what I've been waiting and looking for market to do for the longest now. So I'm waiting for gold to give us a bigger retracement to then take it back to the upside. Simply because, one, we've just got the crossover of the EMAs, and market is giving us a pullback at the moment. We have had a big buy up. Look, it's all signaling the sell to me on gold right now. We've had a big buy up, and market has no choice but to give us a retracement. So 50% of that to redistribute, I think it seems fair. So as you can see on the 4 hours on gold, yes, it is looking like we are going to get a bigger retracement back down to the 1800s. So 1807 is my zone. $1807 is my zone. Between the 1879, so this is what I do, guys. I will look for my retracements, but then I'll look to see what's happening on my other time frames to actually get the zone. So for me, if market rejects this zone here, then we're in for the buy on gold. All right, we're in for the buy. So on our 4 hours, on our hour, I mean, as you can see, market is crossing over the blue line. Once we get the grey crossed over, we will get a retracement back to the upside, and then market will drop. It's going to drop. I'm just going to be patient and wait for that drop. All right, so GBP USD, same principle now. We are on the hour and it's giving us sellers. We go to the daily and it's giving us consolidation. So as you can see, silver is actually trying to push back up today. So we'll see if they disassociate from gold. No joke. On the 4 hours, it's the same thing. On the hour, we still got sellers signaled in this market as to why this market is kind of struggling to push to the upsides. But when it takes off, it's about it will take off. It will take off on you. All right, so let's see what SPX is doing on the daily. SPX is going back for the buy. That buy up on SPX. To the point where there's no more data. Huh? That SPX has just been buying for a heck of a long time. It came back down to retrace because, well, we can't see where this EMA crossed over because we have no data back there. So you can see that we got the crossover of the grey and the blue. We already had the retracement back to the red, the The grey and the aqua just crossed over. We already had the retracement back to the blue. But we should see SPX buying up now. Realistically. So if we go to the 4 hours, we can see that we do have our buy trend confirmed for SPX. So do we wait for a retracement? Yes. So on the hour, it's signaling that it wants to give us the retracement. That's what I'm seeing here. Because the aqua just crossed over the blue, it did pull back up, but it can still also reject right from there. On the weekly, you marked up what to drop to the 1620? Gold. I tell you for free, gold ain't coming back down to the 1620, 1600s. They ain't never gonna let that market tank like that. Never. And you know why they ain't gonna never let that market tank like that in this day and age? Because Putin would make too much money from it. And then he could buy all the gold he wanted to if it was £1,600. Yeah, I don't see gold. I don't see gold going back to the 1600s. Let's have a look at the weekly. And I can show you what I mean. So this is the retracement that I see gold doing on the weekly. 1843. 1843. If it's going to come back down on the weekly to retrace to the 30%, this market's been consolidating. It's been consolidating. So on my EMAs, the lowest I see it ever coming is 1677. It's not even going to do that. Why have I got no data on these? Where is my blue EMA? It's not even giving me the blue. Yeah. There's actually no data. Why have they got rid of all the data? This should leave it. I'm on a session. I'm coming, okay? Where's Twister? Downstairs. So yeah, the retracement I'm looking for on gold. Because what you have to remember is every day or every week that a new candle opens, because we're on the weekly, this EMA will move up. It moves up towards price. So by the time market drops, I don't believe market's going to give us a big 1,000 pip drop every day to get back there that quickly. So by the time market retraces, could come back down to the 1700s. But I don't really feel like that's likely at this point. I feel like they will retrace it to here and then continue it to the upside. They're either going to trickle it down to for a very long time just to bring these EMAs up to each other. That's what they will do. They will take their sweet time, like here. They will keep market in the same place just so that they don't have to give it a bigger retracement. Yep. 1,760.85. Yeah, they've got imbalances on both sides really, because there was a big imbalance here and then market came back to redistribute. They got a big imbalance here. Market came down to try to redistribute, but they said, no, you done out here, honey. There was liquidity here. They came back for that liquidity. They came back for the liquidity on the weekly. I feel like gold is another one that's going to give us a retracement and then give us another pullback from the 30%. USD MXN, I don't really trade it. But this has been dropping it like it's hot for a minute. Like, look at what the USD MXN did. It fully pushed all the way up, and now it's just absolutely tanking. Let's go back to the daily. It's still dropping. Yes, the MXN is still dropping. I don't know what the Mexican pesos are doing right now, but they're doing something, honey. Jeez. They're doing something right now. All right. So let's have a look at UJ. The US dollar is actually going to shoot up, you know. It's actually going to shoot up. I don't know why they did that today. But their retracement's not done. They just don't want the market. They just don't want market to keep dropping. I'm telling you, the US, they love to cheat the market. It's not a joke. That they really love to cheat the market. Please tell me how they opened with such a big imbalance. Like, you opened all the way up there the other day. Come from close at 131 and you open at 132. Like, you open a whole 100 pips away. Make it make sense. US dollar love to manipulate this market. They really do. So we'll see anyway whether this is going to continue back to the upside. So yeah, if you can catch market when it's setting up beautifully, you know what time it is, honey. So Bitcoin's another iffy one. It's another iffy one. That's in a point of consolidation that it's just gonna act like it doesn't know what it's doing. Like, yes, like the weekend, for instance, it gave us a nice buy up, and then it came back for every piece of that liquidity, every piece of that move that it made. It came right back down. Every single pip that it made on Saturday and Sunday night, it came right back for it. So just be careful, guys. What time is it? It's 1:30. So the liquidity is about to be injected into this market. So guys, if that in-depth explanation and the amount of examples that I gave you made any sense to you, type some 7s in the chat. If you have any questions, type some 5s in the chat. You're more than welcome to unmute and ask your questions. Let me know what you think. Let me know how you feel. I feel like this strategy, even though it can look like a lot, it's actually the best strategy for me personally, because the more confirmations I can get just by looking at the chart without having to go here, there, and everywhere to get confirmations, then that's the best for me. I don't need to rush the market. I don't need to guess where the market is. I don't need to do anything else apart from just look at what my EMAs are doing. If market reverses on me, it reverses on me. I wait for market to set back up because clearly I got into a consolidated market. My EMAs stop me from getting into consolidated markets. All right, I'm glad it makes sense to everybody. I'm glad. Okay, so I have had a couple people say to me, this is like DeLorean. Guys, we don't know about that anymore. We don't know what that is. What is that? Huh? Who that? Who that? I'm joking. But we're good to go. We are good to go with the strategy. So for those who are on Kim's, let me start recording now. Nobody has any more questions. You know, questions might help somebody else.